Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Scarlet Fu, we're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube. And quick take, a broad-based rally here. Carol Massar, as the S&P 500 sets up for its first close at 4,000 in a couple of months.
Pretty amazing, right? And to see also, once again, I know we've talked about lighter volume today ahead of the holiday, but we've seen some buying once again into the close. As for outperformance, those retailers, I know Abercrombie & Fitch among them and a few other names coming in with results that certainly gave some enthusiasm to the investor community. So S&P 500, the super composite retailing industry index, up about 1.4%.
I'm not trying to rain on the parade here, but I was pretty surprised to see that on the S&P 500 over the last 5 days, even though this is the first time we've hit 4,000 or closed above 4,000 in months, Romaine, it's still up only 0.3% over the last 5 days. Yeah, speaks to the volatility.
Yeah, it speaks to the volatility and it speaks to the tightness of the trading range. And we should point out that when you go back to that September 12th number and where we went from September 12th to the low of the year-to-date low, which was, of course, on October 12th, that was a 13% decline, and we haven't recouped necessarily all of that just yet. So interesting moves here, Scarlett, and we've been talking here about how tight the trading ranges have been.
I mean, even as we kind of break out a little bit here with a gain of better than 1%, for the last 7 trading days, the S&P 500 has not closed with a 1% move in either direction. And the last time it did was, of course, on the back of that October CPI report, which sparked that massive rally, almost a relief rally, like, oh, in fact, inflation has peaked. Let's move on. Well,
it'll be interesting, too, because, of course, we get a couple of really interesting economic data reports, including that jobs data in about a week's time, and then that CPI number that comes the day before the Fed meeting. The Fed meeting, of course, concluding on December 14th. Here's the closing numbers here. The S&P 500 is going to close at 4,000, but just by the skin of its teeth, though, 4,003.64. That's up about 54 points or about 1.4% on the day. The Dow Jones Industrial Average higher by about 1%, closing above 34,000, and the NASDAQ Composite higher by 1.4%, closing right around 11,174. And the Russell 2000, similar gains, at least on a percentage basis, higher by 1.2% on the day.
And Romaine, you like to give the big numbers in terms of how they all closed on this Tuesday. Just digging a little bit deeper into the S&P 500. We'll get into the industry group shortly. But 448 names in the S&P 500 higher. So you saw some fairly broad-based buying in today's session. 51 lower, 4 unchanged, Scarlett.
Yeah, you can back that up with a look at the sector performance here. This is 24 industry groups in the S&P 500, and 23 groups are higher. The only group that's basically unchanged is communications and professional services. Basically little change. Everything else is green across the board. Energy has led the way all day today as oil prices rise. Saudi Arabia clarifying that, if anything, they might look at production cuts to keep oil prices elevated. And chip companies up by 3.4% on the day. Should mention retailers as well as we wait for Nordstrom numbers to come out. Retailers are a mixed bag, but for now, up by 1.3% as a group.
Yeah, and Scarlett, I actually have a few retailers that are among the names, the gainers that I want to highlight today. First of all, Best Buy, quite a rally, up almost 13% here at the close, top in the S&P 500, soaring the most since 2020 after modestly improving its profit forecast, also signaling its recent sales slump is starting to ease, so lifting this year's forecast for operating income and comp sales. Also want to mention Burlington Stores, again, another one that really stood out in today's session. It was up about 20% after the company's CEO said trends at the off-price retailer have improved from mid-October through November, called the outlook for 2023 next year very positive. And then I did want to mention the semiconductor space where we really saw some outperformance today. Analog devices is one of the big reasons why, top in the NASDAQ 100, up almost 6% in today's session, giving a bullish forecast for the current period. So we're talking about the first quarter and saying that demand in their 2 markets that they really play into, industrial equipment and cars, are both holding up better than the broader chip industry. Fourth quarter results, by the way, also a beat. So again, this one was up about 6%.
And I'll just add one to your board, Manchester United, those shares closing at up 15%, biggest one-day gain on that stock trading here in the U.S.
All right, I'm not going to talk about sports because I already embarrassed myself talking about the World Cup a little earlier today. Let's go to decliners. Carol, you got the gainers. I'll look at the decliners. I did want to check in on shares of Disney a day after posting its biggest single-day gain in years after Bob Iger came back to replace Bob Chapek. A little bit of selling today as investors continue to digest the news and understand what the reorg ends up meaning. Down 1.4% today, underperforming the wider markets. A tale of two different types of earnings reports today when it came to retailers. Dollar Tree finishing the day down by 7.8%. Executives there said the company expects annual earnings per share to come in at the lower end of its previously given range due to higher costs leading to margin pressure. And then the medical tech company Medtronic down 5.3%. It missed revenue expectations for the second quarter. The company also cutting its adjusted EPS forecast for the full year. Macro pressures, including Forex and supply chain issues, continue to hurt the company's results.
All right, yields lower here on the day. The two-year yield, though, only down by about 2 basis points. The bigger drops came in the belly of the curve and the long end of the curve, 6-7 basis points on your 5, 10, 20, and 30 year. You put it all together, you got a 2-10s curve right now. Down in the whole, negative 77, holding right now at the lowest level, Scarlet, that we've seen going back to 1981.
Yeah, I'm looking at it, and it's been contracting, or the yield curve has been more inverted for what, 5, 6, 7 days now. 7 straight days. 9 if you want to include the fact that it didn't change on Friday, November 11th. So it's interesting here. What does that signal? Is it a stronger signal of recession?
I think so. I mean, we've been talking a lot about this, particularly when you look at that 10-year yield and the idea here that it's going to drop a little bit faster and below where the Fed ends up on that terminal rate. And I think that's what a lot of people are concerned about right now.
You guys saw that new note out from Goldman that said the 10-year yield is going to be above 4% through 2024.
Right.
Interesting to hear that, given that we've only seen the 10-year yield up, 22 days so far this year above 4%. So that, portends a rocky 2023 and 2024.
Yeah, a lot to parse here, definitely when it comes to the macro. Also going to talk the micro. I'm going to say goodbye, at least for now, to Tim Stenovec and Carol Massar, wrapping up our cross-platform coverage of the market close right here on Bloomberg Television Radio as well as on YouTube.